Both of those numbers showed inflation is subsiding somewhat. They were lower inflation numbers than what the market was expecting.
Hey everybody, Jaysen Barlow here with Sell for 1%. I'm joined as always by Dad Dave Barlow, Mother Jamie Barlow, and Rich Cercone with Equitable Mortgage to bring you guys a market update. Lots happening with CPI, jobs reports, record credit card debt. Rich, what is going on?
Well, we've had a couple of positive days for interest rates. We had numbers come out yesterday for CPI, which is Consumer Price Index. This morning we had PPI, which is Producer Price Index numbers. Both of those numbers showed inflation is subsiding somewhat. They were lower inflation numbers than what the market was expecting. As we've said many times on here, that is an indication that maybe the Fed will be more inclined to lower rates in the future, even though yesterday they came out and kept rates the same. These kind of numbers, lower inflation numbers, again, weaker job numbers, if we see those are the things that the market is looking for, because that means the Fed will ultimately start to lower rates some point in the future, and mortgage rates are always forward thinking. So we're seeing a positive couple of days in mortgages. You're probably putting a 6 in front of most scenarios right now in a 30-year loan. There are certain scenarios that will get you into the low 7s still, but better than mid 7s and high 7s as we were a few weeks ago. So there seems to be some relief. Get out there and find a house. It's summertime and a perfect time to buy.
Yeah, we've noticed the number on the front of that handle over the years. It really does matter a lot. It used to be in reverse. Dad and I, tracking rates coming down, back in 2012, 13, when it was on its way down on its initial descent. It's like, if there's a 6 in front of that, this weekend for sellers, it's going to be hopping. Buyers, don't mess around right now, because as these rates come below 7, people buy. They go above 7, they pause. And so it's interesting to watch all this play out. It's been a couple of good weekends for my sellers. Dad, what are you seeing for your listings?
Yeah, exactly the same as, we talk about in January, February of this year, when interest rates were 6.5% or thereabouts. For the first time in like 4 years, the Columbus Multiple Listing Service had better numbers, homes sold year over year to the previous year. So January, February 2024 was better than 2023. And then around Easter, we saw interest rates pop up from 6.5% to 7.5% in about a 2-week period. And we saw March, April slow. And so I think, again, buyers see it come below 7%. For lack of a better term, it's the new norm, and they feel comfortable buying at 6%. And as you just mentioned, the thing that happens is that everybody else is seeing that and piling into the market. And so the house that you wanted to buy, you now have 3, 4, 5 competitors, and you're getting outbid again. And so, I wouldn't wait. Go look. We've talked about it many times. Get the best interest rate you can. The house is going to most likely continue to appreciate in value. And if some point in the future rates dip to a point where you can refinance, you get the best of both worlds. And so, Jamie, as a buyer agent, what are you seeing?
I think you guys kind of hit on everything there in your...
Yeah, Dad just kind of took the win from your sales. I was going to, say it's like, for the buyers, and Jamie, I'm sure you see this, it's like, be ruthless, but be selective, like a baseball hitter. Like, don't stop, right? I mean, like, if buyers take their foot off the gas, you want to keep looking. It's not been so hard for buyers, I don't feel like, the last couple of months compared to like 2 years ago. What are you doing with your buyers right now, Jamie, when you're out looking at houses?
Yeah, I would say it is more of there's a lot more inventory out there now.
There is.
Than there has been. And so you have more of your pick of the litter of what exactly you want, but you have a higher interest rate that you're, competing with. And then, we are still seeing houses that are priced right in certain areas go multiple offers. So it can still be pretty challenging depending on, what you're looking for, what price bracket, and where. Location being, always the most important factor. But I think as rates do come below 7%, you're seeing activity pick up. And like Dave said, don't wait. And like Jaysen said, be aggressive with the ones you like. If you like a house, don't let it slip past your grasp there. Date the rate, marry the home.
One really concrete example that I could give to the folks would be, I just this morning contacted 4 or 5 people who closed with me in October and September of last year. They closed at 7.75, 7.875, really high rates considering historically where we've been in the last 10 or 15 years. But they got a great deal on the house. And I'm contacting them here today and saying, hey, get an application in for a refi because it looks like I'll be able to get them into the high 6s from the high 7s. And for instance, I'm looking right on my screen here at a $342,000 loan for one person. They're going to save $300 a month by refinancing from 7.75 to 6.875. So it's real, and we've said that many times. Buy the house and refi later. And here's a perfect example: these people who bought in October are going to save $300 a month on their payment. So for 6 months, they paid a little bit higher rate, and now they're going to refinance.
And so, to me, it would be interesting. To take a look at the value of that house in October when they bought for $342, and just 8 months later, what's the value of that house now if they were to put it back on the market? And my guess would be, you went from 342 to 352, 355, in just that 7-8 month period. And so you gained equity, and now you're going to be able to save on house payment as well.
Great.
Yep. And then, for buyers in the market right now, this has been a go-to move for years. I really think now, especially with the dynamic, it's the time to strike. Look for the listing that's on the market a little bit out of your price range, on the market for 15 days, 20 days, 35 days, and lowball them. I'm just going to tell you, sellers and a lot of realtors.
We don't like that term lowball.
They freak out when it doesn't sell in the first week or two. And not everyone's the same, but there are a lot of sellers that, they price out ahead of their skis. The realtor is telling them on the backside, you're not getting showing, you got to make a change. And then you come in. I've had a couple sellers here recently take offers that I told them do not take. Rates are likely to come down as we get deeper in the summer. Just wait. Because, I'm willing to wait 4 weeks, 8 weeks, if it's going to mean I'm going to make it $10,000. But, some sellers, they rather sell now and be done. They have fear the market's going to crash. So buyers look for ones that are sitting and offer 20, 30, 40,000 less. If you're not priced right, you're going to get punished in this market.
That's very true. And we see it almost on a daily basis from, again, sellers. Some of them are living, 2-3 years in the past that, we're still in a super hot seller market, blah, blah, blah. And yeah, I have a good example up in Sunbury. We priced the home just a little bit less than what we thought the real value was. And we did get a little bit of a bidding war, and they ended up making, $10,000 more than what they wanted. And it's because they priced it, to be competitive. And sellers always have, this apprehension. Well, I really need to get 350 and I don't want to go 339 because I may not get my number. And it more often than not, I mean, a high percentage of the time, if you underprice it, you are going to get a bidding war, and it's going to push the price back up to where you want it or even better. So don't be afraid of it.
Yeah, and on that one, Dad, I mean, when you do market analysis, it's funny to see when we do a market analysis to determine value, we see list price and we see close price. Normally, the highest close price had the lowest list price. And usually the one that had the highest list price, not always, but that one took twice as long to sell and actually sold for less. So, yeah, a lot of the times you're better off to price it and let the market fight over it versus letting it get stagnant for, a month and a half. And then somebody comes in, like I'm saying, and lowballs you.
Right.
So, and then, the other thing, too, is who's advising these sellers in the market. It's like, a lot of these realtors, and I'm not trying to dog everybody, but a lot of realtors, their mindset is if it doesn't sell, it's not priced right. And they're not, they've only seen markets where things sell in weeks. I mean, Dad, back when I first got into business, your entire gimmick was I'll sell your house in 90 days, they're less guaranteed. I mean, it doesn't take 90 days to sell a house anymore. Back then, 20 years ago, that was lightning fast. So, still panic, buying or selling, the death of the economy seems to be greatly exaggerated. We're pretty resilient. So I'm enjoying the show. I don't know where it's going to go next, but rates are on the move down. So if you're a buyer or a seller, it's a heck of a time to get into the market, especially before the world ends and we end up in a hellscape with 15% interest rates. So pull the trigger.
I think the big takeaway is that it's kind of like people that do stock market. I'll buy the stock when it drops $5. And it's like percentage wise, you got to think about it. There's a difference between buying Berkshire Hathaway at $75,000 a share and buying whatever for $20 a share. The $5 is percentage wise on 75,000 versus $25. Point being is that if you're waiting, for interest rates to go from 6 7/8 to 6 3/4 or even to 6 1/2, it's not going to make a big change in your monthly payment. Where you get the big change, as Rich just said, is when you go from 7 3/4 to 6 7/8 on a $350,000 house, you're going to save $300. So don't try to save nickels by wanting the interest rate to drop another 1/8 of a point. It's going to drop some. I mean, Rich, if you had your crystal ball, and we're not going to hold you to this, but let's say everything just kind of maintains the next CPI next month, the next PPI come in, and again, it wasn't a big change. Like the CPI was a 0.4% less than what they thought it was going to be. In the next month, 2 months, whatever, do you see interest rates, continue to drift down a little bit, and in your prediction of where you think they'll be?
Well, for what it's worth, my humble prediction, I think if we continue to see CPI and PPI be tame, maybe a little less than expected every month over month, I think that we will start to see mortgage rates continue to go down because there was this time a month ago or so that people were starting to talk about the Fed raising rates next, not lowering rates. So we need to get that off the table and get it to the point where people are relatively assured that we're going to see 2, 3, 4 rate decreases in the next 6 months to a year. And that will help mortgage rates a lot if we see that.
I'm thinking that if everything kind of stays as is, maybe CPI, PPI come down just a hair like it did this last report, we could see interest rates in the next couple, 3 months, back to the 6.5% range, which in my mind is kind of like the new norm. People are okay at 6.5. But again, if that happens, you might save a couple, $100 or so on your mortgage payment, but then you lose 10, 15, 20,000 of appreciation. And so the old saying is, you're reaching down the pickup nickels while you're losing dimes. And there's a balance. And that's one of the reasons why I think, you want to talk to Rich, talk to one of us. We can help walk you through the whole process and get you to a point where you want to be. So it's all interesting stuff, how it's all intertwined, from the Fed to the PPI, CPI, jobs report, blah, blah, blah. You throw all the ingredients into the big pot, and here we are. So
you add an election into the whole thing.
Yeah. So there's a whole different dynamic. So we'll see what happens here. So,
right.
All right, Jada Bomb, thank you. Why don't you wrap us up?
If you guys have any questions, leave comments below, ring the bell for notifications, and subscribe to the channel. We like the content. If you're thinking about buying or selling a home, the choice is clear. Come on, call me, call Dave, give Jamie a call. Rich is the man. We've got a lot of lenders that are awesome. Rich is one of them. Rich is fantastic. If you have questions about the process, the other day, Rich explained to me going through, buying points down and, how to break even on those. But that's another tool in this market is buying the rate down. You can use it as a buyer or a seller. Call us. We'll guide you. We'll get you home. What information is on the screen below and the details down below the video as well. Thanks for watching, guys, and we'll catch you next week.